If you're a contractor, there's one simple thing that can protect your business and your personal assets from the IRS, and most contractors don't even realize it. Payroll taxes aren't just another bill, they're personal. Handled correctly, you stay protected. Handled wrong, it gets expensive fast. So in this episode, we're going to make sure you stay on the right side of it. So let's get started. Hey everyone, welcome. If you're new to the channel, we talk all things accounting for contractors here. My name is George. Today we're breaking down payroll taxes and what they are specifically for construction contractors, what they are, what forms you must file, what happens if you fall behind, and how to protect yourself. If you run crews, issue paychecks, or withhold taxes, this is mandatory knowledge. So what are payroll taxes? Payroll taxes aren't just taxes, they're money you're withholding in trust for the government. So there are three main categories you deal with. Number one, federal income tax withholdings. You withhold this from your employees' paychecks. Employees complete a Form W-4, you calculate withholdings, you deposit that money with the IRS, you issue W-2s by January 31, and you file Form W-3 to transmit your W-2s. So simply put, this is not your money. Number two, Social Security and Medicare, also known as FICA. So Social Security is 6.2%, Medicare is 1.45%, and that amounts to 7.65%. And that's just say the employee portion, and you double that to get also the employer portion. So between employee and employer portion, it's 7.65 times 2, 15.3%. So this applies to field crews, office staff, project managers, foremen. If they're employees, you're responsible. So the next one is the Federal Unemployment Tax Act. This is 6% on the first $7,000 of wages. It maxes out at $420 per employee. The employer pays this and it's filed annually with the Form 940. So another thing that's common, you also deal with state income tax withholding, state unemployment, workers' comp, and possibly state disability. So construction payroll is high volume and high turnover, which increases your risk. So let's talk about reporting and depositing requirement. So here's where contractors get in trouble. Payroll taxes must be deposited electronically using EFTPS. No paper checks, no I'll catch up next month. Most contractors deposit monthly or semi-weekly. It becomes semi-weekly if payroll volume is higher. So what forms need to be filed? Form 941 is filed quarterly. It reports income tax withheld, Social Security, Medicare. So it's filed 4 times a year, and if a mistake is made, a 941X is filed. A Form 944 is only for very small employers, those with annual tax liability of $1,000 or less. A Form 940 is for the FUTA, and it's filed annually. So if you use a payroll processing software like QuickBooks Online Payroll or Gusto, one of these, they would file all these automatically for you. It's just that if you're going to start the first year on that software, you want to make sure everything is onboarded properly. I've heard nightmare stories about things not being onboarded and people get incorrect W-2s and then they need to issue corrected W-2s, amendments, everything. So as long as you're using one of these payroll softwares and everything is onboarded properly, then everything will generally automatically file on its own. But always double check with the payroll software first. So let's talk about the one payroll tax thing that you really need to look out for. When you withhold federal income tax, employee Social Security, Medicare, that money is called trust fund taxes. If you fail to pay it, the IRS can assess trust fund recovery penalties. And here's what that means. The IRS can hold owners personally liable, go after partners, go after officers, go after anyone with check signing authority, and even go after bookkeepers in some cases. They look at who made financial decisions, who had authority to sign checks, who decided which bills got paid. Was the non-payment willful? So if you knew payroll taxes were owed and paid suppliers instead, that would be considered willful. So let's talk about something in construction. It's not uncommon for a contractor to fall behind on payments. So in construction, cash flow can be inconsistent, retainage delays payment, change orders get disputed, clients get paid late, you're fronting material and labor, so what happens? You pay suppliers, equipment leases, insurance, subs, and a contractor may be inclined to delay payroll taxes just temporarily. This is a big fatal flaw, because once you start using payroll tax money to fund operations, you're digging a hole with interest and penalties compounding fast. So first rule, always pay payroll taxes first, even if you owe back taxes. The IRS is far more cooperative if you're current now and you're not increasing the debt. Also, if making any back payments, specify the tax type, specify the tax period, request payment apply to trust fund portion first. So if you don't designate properly, the IRS may apply payments in a way that leaves you personally exposed. So next thing you want to be mindful is always consider the fact that you can do a payment plan or offers. You can always do installment agreements. Offers and compromise, though, that will be very rare for payroll taxes. Or appeals if assessed personally. But again, this would all be a huge administrative headache and cost you a lot of fees. for, CPA or a lot of your own time. And with payroll taxes, there's really no joke. You should just pay that up immediately. Or again, as long as you're set up in QuickBooks Online Payroll, Gusto, Rippling, one of these payroll processors, or ADP, those should automatically deduct everything. But always make sure you're set up correctly. Also understand this, payroll taxes cannot be discharged in bankruptcy, and the IRS has 10 years to collect. So all this being said, how can contractors protect themselves? Number 1, separate payroll tax money immediately. Never mix these with operating funds. Number 2, use a payroll service. It's deductible, it reduces your risk, and it ensures deposits are made. Number 3, good practice is to monitor the EFTPS. Log in regularly, verify deposits, and don't assume. Number 4, have written agreements with partners. So if you're an LLC or a corporation, include payroll tax indemnification clauses. And number 5, don't ignore IRS notice. They can escalate very quickly, and if you ignore them long enough, they can just take the money out of your account. They can always padlock your business, levy your bank accounts, seize assets, or assess personal penalties. So just know that an LLC doesn't shield you from payroll tax liabilities. So handled correctly, payroll is routine compliance. Handled poorly, it's personal financial disaster. So if you're unsure whether your payroll is compliant, current, or structured correctly, you should get clarity before there's a problem. So our calendar link is down in the show notes. Feel free to book a time. Hope you found this helpful and see you in the next one.